or you can check us out. It's a free consultation. There's no risk to you, so give us a call. I think you'll find it'll help. You know, when I started my career years ago, I didn't have a mentor, and it took me a long time to become successful in the marketplace. It was only when someone took me under their arm, so to speak, and showed me how to do this that I became successful. So give us a call, 877-219-1482. Hey, it's Friday, and we all know what that means to the markets. As you move into the trading day, the equity markets are all lower for the week. The fact is, many of the markets came under pressure this past week, including crude oil, that looks like it's going to close lower for the week after reaching a 6-month high earlier in the week. This is not a particularly positive sign for this market. Make no mistake, yesterday's market action was negative for the S&P 500. As all our trade triangles flashed red, it was like an alarm signaling lower prices ahead. Silver also flashed an all-red trade triangle configuration, showing that there could be a lot more downside to this metal. You know, gold stays in a trading range after its big pullback, so what's happening in the world? What's happening in Europe? I don't know. Let's go to the charts and the video and see how we can create and maintain your wealth in 2011. So let's go right to the charts, and we simply click here, and here's my portfolio. Welcome, Adam Hewison. This is what I use every day, and a very, very powerful, easy to use program. And you can also, if you want, you can find out more about coaching right here on MarketClub if you're a member. Even if you're not a member, you want to take a trial, we have opportunities for you to do that. So let's go to our portfolio manager. Markets, S&P 500 cash, minus 100. That is all red. And as we go to the charts, you'll see why. It's a weekly chart we're showing you right now, so the market is down for the week. In fact, right now we're down almost 3.5%, over 3%, 3.74%. And let's look at the daily, because that's what we want to look at right now. This is not looking good. I think this is later on today. I think we're going to see this market come under pressure. I just don't think we're going to see much rallying power in this market. You've got a couple of things going for you. We talked about this earlier. One was the parabolic. We were below the parabolic. You also had the MACD negative, and also I think if we put our Donchian trade channels, which we always use, you can see we're at the bottom end of that, but it's beginning to turn down. With our trade triangles all red, this is not a good sign for this market. As I say, we caught a lot of flack when the market rallied up, and we didn't get enthusiastic on the long side because our monthly trade triangle is still negative. That's the dividing line in equities and in the indices. So we can put in a very simple Fibonacci retracement. Takes us back to the 1160 area, which is a 61.8% level. I would not be surprised to see this market trade between the 1183 and the 1158 level in the next week or so. So let's see how this plays out. But generally speaking, I'm expecting the markets to close lower. And I think next week is going to be a negative week for this market. I don't know what's going to happen over the weekend. You've got the Super Committee coming out on the 23rd, which is Wednesday. A lot going to happen in there, but I don't expect much to come out of that. So let's go to our next market, and that's going to be, I'm going to miss the Dow. I'm going to go to the NASDAQ because that's where most people are playing right now. And you can see the NASDAQ's the same way. It's lower for the day, lower for the week. Does not look good in my eyes. All of our trade triangles are negative. Again, we can see this market trading down, and I'll put the Fibonacci on right here. We can see this market trading down to certainly the 2470 level, 2520 level, somewhere like that. I think next week this market's going to be negative, certainly leading up to the Super Committee, because I think that's going to be probably one of the overriding drivers this coming week. Also, obviously, it's the weekend. It's Europe. Lord knows what can happen there. Can the government that Mario Monti is trying to put together, can that fall apart? Yes, everything is possible. I think you've got to be very, very leaning more to be protective as opposed to be aggressive on any kind of long positions in the market. So let's go to our next market. That's silver. Now, silver also has the similar formation, minus 100. We've seen a little rally here. Our last signal came in at 31.19. The market's at 32 and change. It's probably a good place to, if you're not in the silver market, if you're long silver, it may be a good place to get out right now, because this market looks, with all our indicators negative, looks like it's going to erode down and possibly test this level, the 28 to 27 level, and possibly longer term could even go as low as 20. So that's the long-term support for silver. So next market is gold. And gold has really gone from a plus 100 to a plus 55, indicating that it's a trading range. It's not acting particularly well today. It's down, and we could see this market's obviously down for the week, obviously. Excuse me. But we could see this market coming back a little further on a pullback. Possibly, I think the level we were looking at, let's put the Fibonacci in again. And this is why this tool is so wonderful to use. You simply click here, what you get the yellow box on the left-hand corner, drag and drop, so you can see, take that down there. 1680 is about a 61% pullback. If you go all the way back down to the lows that we saw in around late September, we could be looking around the 1640, 1650 area. So again, let's see how this market goes. I wouldn't be in a rush to buy silver. It's like catching a falling knife in these markets right now. So really be conservative and play it cool. So let's go to the next market, and that's copper. We've talked about copper being a industrial metal. It's actually performing a little bit better for the day so far than some of the other markets, but it's nonetheless, it's down for the week, and it would look as though it's sort of moving down. The key level here is the 330 level. If we go through 330, then we're going to see a test of the 310, 3.00 level, which is the lows right around here. So I think if we go through the 330 level, that's definitely going to be the kickoff to push this market lower, and I think we're going to see that happening. So let's look at our next market. We're covering a lot of markets today, and that's the crude oil. And this is really kind of, look at this market, boom, absolutely not acting well. And if we look at this on a weekly chart, which you can do very easily on MarketClub, look at that, lower for the week. That is not a particularly good sign for this market. So the pullback on the daily charts today certainly is a very strong pullback. You've also gone the parabolic, you've gone below the parabolic. The parabolic is now at 103.37. So generally speaking, this market could well be on the defensive, and certainly we are just very close to tipping down with the MACD, which would be a lot of more technical selling coming in. Plus, you are not oversold yet on this market. So I think the line of least resistance could well be on the downside here, at least in the very short term. So let's look at our next market, and that's the dollar index. Again, the dollar index, we're still positive on this. It's back up over 78 rather. That was a very key level. It's closing up for the week. It's plus 100 on the scorecard. So this looks like to be a strong trend. We talked about this base it's built to go up to the 79.50 to 80 level. Still believe that's going to happen, and we still think that's going to really be the way to be in this market. Now we're looking at our last market for the day, and that's the Reuters-Jeffries CRB index. Now that's down again today. We basically have been, if you remember, our trade triangles, our monthly trade triangles were negative on this from 335. We're currently trading at 311. And we've just all clicked into a minus 100 strong downtrend, certainly closing down here. The previous low close we saw was 312. We're currently trading below that level. This is going to be really a pusher down to the 305 to the 300 level, and possibly to the 295 level. So again, the trend is your friend. The trend is down in this market, and if we go to our portfolio, you can see quite simply it's down in the S&P 500, minus 100. And one of the cool things you can do with MarketClub, if you don't already know this, you simply click here, and it sorts all your scores out for you. So immediately you can see that the S&P 500 is negative, the NASDAQ is negative, the Reuters-Jeffries index is negative, the silver is negative, the copper and Dow Jones are leaning towards that way. That means 75 means they're just emerging possibly into a negative trend. The 55 plus 55 is in gold, and that's a trading range. And also, if you look at the crude oil, plus 75, it's still potentially in a bullish trend, but it's getting very close to making a change. And the plus 100, of course, is for the good old United States dollar that's finally getting some respect in the world markets with its move in the last several weeks. So, hey, this is Adam Hewis. I'm going to be back tomorrow, and again, we'll be talking about the weekly closes, how the market closes today, analyzing these various markets that we look at, and seeing how we can maintain and create your wealth in 2011, and of course the new year coming up, 2012. So give us a call. It's a free consultation. It's a free telephone call. Don't miss out on this opportunity. Give us a call, 877-219-1482. This is Adam Hewison for Market Club. I'll see you tomorrow with a weekend update. Have a great day trading.